Hello, today is Monday, the 25th of August, 2008, and this is Brian Shannon from Alpha Trends. The market finished with a pretty good size loss here today. I said on Friday that I was impressed with the action, that it seemed as though maybe we were seeing a little bit of light at the end of the tunnel, and perhaps this market was recovering a bit. But, true to a bear market, we're seeing just a lot more volatility than definitely I'm expecting in here. And, I guess I really shouldn't say that because I have been stressing for months now that we're really in a day trader's environment and that most people should not be involved in this market unless they have the ability to be disciplined enough to trade on shorter term time frames, because this back and forth nonsense is just really chewing up a lot of people, I think, in here. And if you participated in the chat that I did for free this afternoon, you see, we went through a lot of stocks, and I was outlining what would get me bullish on certain stocks. And most of these stocks are very similar to the markets, that there would be low declining 5-day moving average. Even when we have a bullish looking picture on a daily time frame that looks like it might be getting ready to move higher, these shorter term trends are still badly damaged, and that means you've got to be very careful and can't really trust in these moves so much. So as we saw Friday, the market made it up to this trend line here. What I was hoping for was a pullback down towards the 5-day moving average. Hopefully we would have then seen that 5-day moving average flatten out and then begin to rally. And I said that I think it was, the market really had to get above 131.5 if we were going to take the upside seriously. But right now what we're seeing here is clearly that we've got these lower highs and we've got this level down here that I've been saying about 126 and a quarter. Breaking below 126 and a quarter, I think that just paves the way for a lower low on this time frame, which brings us down probably to test about the 125 level, and then below that at 123 and a half or so. The daily trend is still, badly damaged. We've got a declining 50-day moving average. We've got these 10 and 20 crossing back and forth above them. And what that means, again, is indecision. And indecision comes often at turning points. So which way this market goes is anyone's guess. But the primary trend does remain lower, so risks remain very high, and that's something that I need to continue to stress here. But today basically, what did we see? We saw a reversal of a reversal. We were looking at this level here. That there was some support near 127.75. It acted as resistance. The market leapt above that on Thursday afternoon, held on to those gains on Friday. Today it opened lower and continued lower. Now, what I was looking for was maybe a pullback to the 5-day moving average, find some support along in there, and then to buy strength. That strength obviously never developed, which is why you never want to buy on weakness. You want to wait for stability and then momentum in the direction of your trade. Otherwise, you're just guessing here, and that's not a professional approach to trading. Professionals don't guess. They anticipate certain scenarios and then wait for the market to confirm what those scenarios are. So as far as a bullish pattern here, it's just not materializing. You have to continue to be on very high alert. Yes, the volume is light, but losing 2% hurts just as bad on light volume or heavy volume if you're long stubbornly in this market looking for a reversal. We need price confirmation, and right now, being back below that 128 and back below the declining 5-day moving average, we still have to be very, very cautious on this market overall. The financials, again, we've got the 10 below the 50, the 20 above that. They're all declining. Odds do favor another push lower in here. They were looking like maybe getting above that $20.30 level on Friday was going to perhaps pave the way for a little bit of short squeeze. And I said, you want to look at that 20.30 level. If it breaks back below there, then it sets up another test of 1975, and that's where we are right now. We're looking like we're back below that 20.30 level. The next potential level for this market to hold on is 1975, and below $19.75 cents, I think we could see a little bit of panic. People were holding on to a bullish scenario based on a rumor in Lehman Brothers, and I was talking about this during the midday event, so that's why those lines were on there. But clearly the market doesn't believe these rumors about a takeover, so there's really not, if that's the reason the financials rallied on Friday, well then, we're really on shaky ground here as far as what's holding this market above this $19.75 level. Breaking below that could lead to a panic, which then drags the S&P 500 and basically the whole market with it. So the financials remain important, but again, best left for only the most aggressive short-term traders. The Russell 2000 continues to hold above this $72 level. We keep probing a little bit lower each day, but it continues to hold up above that level. Let's take a look in here. I don't think the market really got down to $70.88, and in fact, that was a bad print. The low today was actually closer to 71.60. So let's just 7160 is right around here. So it came down to the 200-day moving average and held for now. We've got that bigger level here on the weekly time frame where we'd seen that support act as resistance once, and now here once again we're at the conjunction of all these moving averages on the daily time frame. So like I said Friday, what would be nice to see would be just some consolidative action that maybe even brings us down as low as the 50-day moving average, down near about 71 or so. If it can do that, then perhaps we can, pave the way for a move above 74. But it's going to take a move back above 74 before this market can really make any headway. We've got the declining 5-day moving average, and I was looking for the same thing here: pull back and then rally. It just kept pulling back. You cannot go in and buy these markets when they're below a daily VWAP, like we saw here in the IWM and like we saw in the SPY. That they pretty much stayed below that daily VWAP all day, and that's not the type of environment that favors a turnaround. The Nasdaq 100 was down $1 today, or 2.1%, back down actually below the 20-day moving average, the 50-day moving average right down here, and the 50-day moving average has added significance to it in that level because it now is in the same spot where we saw this prior level of significant resistance that led to this move higher when that resistance was broken. Now we're back down. Will that resistance become support? Are we seeing similar action to what we saw back in late March and early April? That's anyone's guess for now, but right now you have to be very defensive with a badly damaged shorter term picture. It means that, again, I was looking for in here a pullback to the 5-day moving average, then a rally. The rally never ensued, so there was no reason to buy into this weakness. Even though it looked encouraging on Friday, that was quickly taken out of consideration, a bullish scenario on the open. If you were looking to get bullish, maybe right in here right away, but then as soon as it failed, there was no reason to hold on to a bullish outlook. So the financials, the S&P, the Nasdaq, they're looking vulnerable. We have some potential hope that the $46 level will hold in here, the 71 to 72 in the IWM, but it remains a very treacherous market environment, and low volume in a pre-holiday shortened week is going to add to that volatility. So just make sure that you're very quick to not only take your losses, but actually to take your gains as well, because they'll get taken away very quickly in this environment.